Good evening, Warren.
Hi.
There you are. What, one of the most overused words in the last 2 years has to be unprecedented. That has come up in every single address by a politician, a businessman, even a child at a school, for pit's sake. Were the events of 2020 and 2021 really that unique and new?
Well, I think for all of us, I think pretty much everyone alive, living through a pandemic was definitely new and definitely something, that the world really hasn't seen, since let's say 1918, 1919. But a stock market crash, certainly something that almost all of us have lived through. And multiple stock market crashes in a short period of time are definitely something that we are accustomed to if you've been in markets for 5 or 10 years. So I must say it was hugely frustrating for me to listen to stock market commentators all around, whether it's global or local, saying unprecedented stock market crash, unprecedented events of what's going on, because actually a stock market crash is usually caused by human beings reacting in panic to some unforeseen news, something unanticipated. And so, fortunately or unfortunately, when the pandemic hits and people, start to panic, what happens is stock markets actually act in a very normal, very usual and very, consistent way, which is they fall apart. And then, after a period of time, logic and reason start to overtake, the panic. And that's all absolutely consistent, all absolutely normal, and definitely not unprecedented.
One has to say, though, and we saw this recently when the South African scientists announced that there's a new variant, the Omicron, which then the World Health Organization declared a variant of interest following its announcement. What happened immediately was irrational, where we were banned from traveling to anywhere in the world, and anyone traveling to South Africa would have to go over hoops in order to leave their countries. What it told me is that was driven primarily by fear, and some would argue greed, the response, certainly in the markets, to movements in the variants and all of that over the last 2 years.
Yeah, I think that you're absolutely right. If you look at fear and greed, those are the base emotions that hit investors in all extremes, whether it's good or bad. And I think in South Africa, certainly fear was a huge trigger for us. In terms of let's say March last year, when the world went into lockdown, we had that really hectic lockdown, where basically the economy was switched off and people went into starvation in large numbers. And that kind of fear did cause markets to react really badly. The problem is that, in the short term, the market can be a bit like a voting machine, but over long periods of time, it becomes a bit more like a scale. It actually starts to weigh things up. And certainly that's what I felt was happened, which was normal. And then, if we see the recovery from that, we suddenly saw a lot of almost irrational exuberance, where investors, especially globally, just started to do crazy things. If we look at the performance of things like Bitcoin and Ethereum and a whole range of different cryptocurrencies, and that's where greed kicked in. And to me, not just normal greed, but also, it almost sounds like we're giving a biblical lesson here, but we didn't just have greed, we had envy, because people were looking at their neighbors and saying, gee, I know someone who bought their cryptos and suddenly they're worth tens of thousands or hundreds of thousands of rands, and they didn't spend that much to get all that money. I'm missing out. It's time for me to jump in. And then we had another very nice overtraded word, FOMO, fear of missing out. And that drove, investors all the way through, whether it was, as I say, cryptos, or we had a whole lot of these crazy, shares going mad in America on platforms like Robinhood, where investors were buying businesses that were basically worthless because someone on Reddit was saying it's a great business and it's going to shoot up. And then as it started to shoot up, more and more people would look at social media and say, I'm missing out, I need to buy. And what happened to those shares, unfortunately, was they shot up and then fell over again and went all the way back down. So we just see this cycle repeating itself over and over again. It's eventually markets are driven by those two base emotions, fear and greed. And it takes quite some time for logic and reason to kick in and overtake that again. And I mean, I don't want to, play down the pandemic and what's been going on. It's had a massive, human cost to all of us. But the commentators who've been looking at the investment world certainly, didn't do themselves any favors, didn't do investors any favors. They should have been much more rational in their views to say, look, the reason why we're having a correction or a crash at the moment is new, but almost always, crashes happen for some new reason. And so in that instance, don't panic, stay the course, use your common sense, which we know is unusual in difficult times. But whatever you do, don't expect that this time it's different, because that's just not true. It's not unprecedented, and markets, they always recover from issues like this. They always bounce. And look at the rand. When it blew out to kind of 17 to the dollar, people were in absolute panic, and all of a sudden it started to recover and come all the way back down to 14.50, and then blow out again and come back down again. And that cycle just seems to continuously repeat itself. And unfortunately, we as investors, as a collective, we don't seem to learn this lesson that we should just not panic or get too greedy. Things will right themselves again.
Because what is 100% true is that those who focused, who stuck to a clear strategy and maintained their consistent view, were probably the big winners in the investing race.
Absolutely, and I think just a very simple comment. Someone who said, I need to have my money in shares, and whether that bought the top 40 index or just a general equity trust. If they hadn't panicked in all of this, they're probably up well over 40% from March last year to now, and doing very well, and kind of smiling. Look at the JSE in the last month; it's reached all-time highs, and they did nothing clever. They just stayed invested, stuck to a very simple, very basic strategy. Whereas people who were trying to second guess what was going to go on and were chopping and changing based on a headline or a scary WhatsApp story, those are the people that unfortunately lost a lot of money. So my view is, being simple in your investment strategy doesn't mean that you're being dumb. It actually means that you can be pretty clever. And then I guess it's time for the confession booth. If I look at what's gone on in the last while, I'm not saying that I'm the cleverest guy around and that I got it all right. I'm certainly really grumpy that I missed out on the way that Tesla performed. I wish I'd bought a lot earlier. I think. The size and scale of what they're doing in that business, it's not just about cars, it's a lot broader than that. And I think that they certainly got it right. But at the same time, I'm equally comfortable that I've missed out on the crypto space, because I still think for now, just being a crypto speculator is not a great idea. I don't think for my own money that I'm going to make a lot of money in cryptos over a decade. But I do think, before social media blows up and your WhatsApp line starts going crazy, I do think real businesses with fantastic opportunities will emerge from this crypto space. I just don't think we're going to get it from, speculating on cryptos doubling or halving, every 3 days or every 6 months. I think that's a absolutely sure way to lose money for people that don't understand the space. And the truth is, most people don't understand how cryptos work, let alone what drives the prices of those assets. So if you don't understand, stay out is really the short answer.
It's the best advice you could give me, because I don't understand it. So therefore, I've been staying very well clear of cryptocurrency. My guest this half hour is Warren Ingram, personal financial advisor and executive director at Galileo Capital, reflecting, of course, on the last 2 years and how fear and greed have been the main driving forces in how we've responded to the investment decisions we've made. Raul in Hout Bay, after the break, Warren will be answering your question.
The Money Show. Personal Finance with Warren Ingram.
Warren, as always, you get to answer a question from a listener, and somebody has offshore USD investment portfolio that has performed rather nicely in the past year or so. The return on investment year to date has been around 21%, and his investment advisor is earning a whopping 2.12% monthly on that. He also owes a bank a chunk of money on his vehicle installment sale with another 45 months to go. He has a decent interest rate of 6.25%. but almost 14,000 Rand that goes off his account every month is a bit of a niggle to him. He says, from what he's heard often repeated on this show by the experts, the traditional teaching is that one should pay off one's debts as soon as possible, and this seems to make sense. His investment advisor has other ideas, though, and is asking for a penny for your thoughts, Warren.
I must say, I don't think the listener is going to like my answer. I think just a couple of things. One of them is that I'm pretty sure that 2.12% fee is not accurate. In other words, I think that's the cost for the advisor, the funds, administration, all of that stuff. It's a total fee. It's not just what the advisor's earning. But you've got to ask yourself some questions. If you've got a car that you're financing over a period like 45 months, I think that's a very long time to be financing a car, firstly, and secondly, paying 14,000 Rand a month on a car is a heck of a lot of money. And so, cashing in investments, bringing them back from overseas is one option, but the other option really is actually sell the car. You shouldn't be buying such an expensive car. It's crazy. Doesn't make sense to me at all. And actually, it doesn't matter that the interest rate is 6.25%. To sacrifice investment so that you can drive a frankly far too expensive car just defies logic, in all honesty. So I'm sorry to be so blunt, but if you want my thoughts and you're going to give me a penny for them, that's the penny. Is I think your advisor is telling you the right thing, and what your advisor should have said was, "I'm sorry, sell your car." That's the biggest mistake you've made. Having quality investments, especially if you've got diversification, is sensible to me. Spending 14 grand a month on a car, I nearly fell off my chair when I read this. It's crazy. Don't do it. Doesn't make sense. Buy, if you're going to pay expensive cars, you buy them in cash. Don't finance them, please. It's crazy.
Well, he owes you a penny now. Let's finish off with the phrase of the week. What is oversold?
So oversold is it's a technical term that a lot of traders will use when they'll say that a share, let's say as an example, has been sold down very rapidly, and let's say that the fair price for the share might be 50 Rand. And suddenly it just drops all the way down to 5 Rand as a ridiculous example. Then a trader would say, well, we think the share is oversold. Possibly the price should be 35 Rand, and so they'll actually be making the comment that it's oversold because they believe that there is a good possibility that it will bounce off those levels and actually go up again. Back to a better level. So it usually describes something that's been sold far too fast, far too quickly, and far too low, and then has the ability to recover. Obviously, it's a prediction. So just be careful if you're an investor that, if you're listening to someone say that something's oversold, don't just, take it at face value. They could be completely wrong. It could go from $50 to zero and never recover. So just, it's an important piece of jargon that people throw about as if, it's a statement of fact. But in truth, it is a prediction, and all predictions should be treated with the same way we take weather predictions. Be careful and be skeptical. They're not always right.
Warren, always a joy. Thank you very much for joining us this evening. Warren, of course, will be back in a week's time. Warren Ingram, a personal financial advisor, as well as the executive director at Galileo Capital.